Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Well. Welcome back, everyone. We've got a lot to talk about. Sonu, we're calling this one episode. Welcome to Facts versus Feelings, everyone. Probably not the first time I'm going to say something I wasn't supposed to. I'll explain why in a second. Welcome to episode 94. 94. We're calling this one, Is This Really Happening? And there's a lot of angles to this, but I guess we'll start with the elephant in the room. It's not so much Washington or drama. It's travel, Sonu. I have been traveling the last couple of days, and it's been an absolute nightmare due to the largest IT implosion of technology within. There's air quotes on YouTube, upgrade that our friends in CrowdStrike did. I'm supposed to fly. We're doing this. What time is it? It's like Monday night around 10 o'clock Eastern time. We're doing this because I'm supposed to be with our friend and partner, Jeremy, up in Minnesota. But the problem is I'm flying Delta later, and Delta is I'm supposed to fly 4 hours ago. I'm not supposed to be here right now. And yesterday I had to fly down to Charlotte to see a friend for his father who passed away, and that I got home at 4 a.m. last night because that was a big mess. I was American, but now Delta seems like the only airline. If you Google this, it's a disaster right now. So when we say, is this really happening? It's my travel nightmares that's happening. I don't know. What do you want to add to that?
Don't say travel nightmare. I'm supposed to be going on vacation in 2 days.
Oh man.
I don't want to jinx anything. Somebody please fix this for the love of God.
Oh my goodness.
That's all I can say.
Yeah. My favorite meme was like Homer Simpson, and he's at the nuclear plant, and everyone's standing behind him. He's like looking at the red button, and they're like, "Oh, is he really going to push it? That upgrade?" Anyway, it's a joke about Homer ruining everything with the upgrade that we had.
But it gets to I was thinking about this, a bigger point. It was, I mentioned this in our morning call with advisors this morning.
Yeah.
Like, whatever you think about the company and the software, and yes, it's great. And, we had our own issues too here at Carson. I mean, we couldn't log in to our VPN, everyone issues. And, from an individual company standpoint, it's like, oh yeah, you want to use the best software. But if everyone's using the same thing, that's concentration, that's systemic risk, right? We just went through this whole thing during the pandemic. Supply chains are supposed to be efficient, stretching all the way to China and Philippines and Malaysia, all these places across the world. I mean, not to minimize the pandemic, it all broke down. Everyone is in the same thing. And here we are, right? And even in economics, we have this thing there's this phenomenon called paradox of thrift. It's good for individuals to save, but if everyone saves, it's not good for the economy. Nobody's spending, right? Same thing. It's concentration. I guess the bigger point I was going to make is, diversify.
So to diversify, I've been spending a lot of time looking online about the weather. Like there's lightning going on right now also in Cincinnati. So that just adds to the 140-pound Walter. The Great Pyrenees is like,
how many black swans do you want?
I don't know. I was going to talk about it. I'm losing my mind. I'm so tired. Oh, that's what it was. I looked at just random flights tomorrow to get to Minnesota. Like, can I get there doing a different flight or something? Like 2-leg flights from Cincinnati, Minnesota. So I don't even know where you're stopping, but you're stopping a couple times, not just one stop. You're stopping like twice. Like, I'm serious, $2,000. Like
wow.
It is. I've never seen anything like this. I mean,
probably have
just
to
need to get to Minnesota. You can't use Delta. Yeah.
Probably fly to Philadelphia and then Orlando and then back to Minneapolis.
And then walk and then take a bike. All right, Sonny. Listen, I'm getting slapped.
My
happy.
sympathies.
Yeah, we need to get into it. Well, thank you. So this is why we're calling it episode 94. Is this really happening? Because that's my playful travel dilemma, but also facts versus feelings. Versus VS at carsongroup.com is our email. Shoot us an email if you've had some fun travel this week, because I know a few of us have. But so no, we're going to get into it here. We'll probably keep this a little shorter than normal. We better, because I'm so tired. I might say something that gets me finally canceled. It says shocking. I've never been canceled, but I am worried that I might be canceled after this one. But it's not live, so hey, we can fix that. Anyway,
don't say cancel. The president just got, I don't know. I shouldn't say it.
See, you're the one that's going to get in trouble now. No, that's what we're gonna go there. We're not going to go there. We're going to talk about that obviously this week. I mean, all the drama in Washington is now like 1968. Sonu's going to talk a lot more about that. Talk a little about the stock market. I got some more stats and figures that says, listen, we could have we just had a 3% pullback last week. Who knows? We could have a 5% at any given time. But there are a lot of underlying pinnings this bull market structurally that are still strong. Then we're going to finish it up a little bit with some economic data talk and maybe a little inflation data talk. Last week had some good, solid economic data. So let's start with that. Sonu, 1968. Talk to me a little bit. You wrote a great blog, carsongroup.com/research. We're seeing this, right? We love to get these analogies. Now, listen, sometimes you're putting a square peg in a round hole, but there is some really interesting analogies with 1968 and right now. You want to take that away for a little bit?
And scary. Considering the first thing you think of, like, why did the Democrats ever decide to do their convention in Chicago again? The last time they did that didn't
go so well.
1968. Yeah. But look, beginning of the year, if you go back to 1968, beginning of the year, Lyndon Johnson, he was probably the favorite to win. He was leading in the polls. He had a net approval rating that was positive, approval minus disapproval rate.
Okay.
But then remember, the Vietnam War was going on, the Tet Offensive. You got bad news. And even then, people didn't really think, Johnson's going to go, win the presidency, win re-election. He's going to run against Nixon. I think Nixon was, a lock-in for the Republican nomination. March 12th, New Hampshire primary. Think of that like what happened at the debate last month. Similar thing happened after the New Hampshire primary. Johnson is supposed to coast to victory. He came in at about 50% of the vote. He was a write-in candidate, too. He was not officially on the ballot, so people had to write his name in. Eugene McCarthy, this little-known senator from, by the way, Minnesota.
Oh, gee. We have to keep talking about that. Yeah.
So he clocked it at like 40% plus. And, yes, Johnson did win that primary, but that's it. His support collapsed. March 31st, he announced he's not running for re-election.
Right. Mm-hmm.
Robert Kennedy steps in, thinking, okay, he's going to take on that anti-war vote. Mm-hmm. And he starts winning. June 5th, he was assassinated after the California primary. Then we had all this. Nixon won the Republican nomination sometime in August. I think that was in Miami.
Okay.
Chicago, August 18, 19, 20th, somewhere around that time. Or maybe it was later in the month. But anyway, August 1968, Chicago, chaos. Finally, Hubert Humphrey, who was a vice president, by the way. Again, interesting parallels to now. He wins the nomination. It was a very close election. We always usually think about Nixon like romping to victory, but that was 1972 when he won 48 or 49 states, right? But in 68, he won by less than 1 percentage point over Humphrey. It was a very close election. There was a third-party candidate in Wallace as well. By the way, through this all, guess what the S&P 500 did? Up
at this point. Yeah.
Up 11% for the year. Right? At the same time, you had, and that was economic, I think chaos is a good word for it, because, the America's spending a lot of money on the Vietnam War. They were spending a lot of money outside. A lot of foreigners had dollars. And especially in February and March, foreigners started selling a lot of dollars, and they started buying gold instead, interestingly. Remember, this was before Nixon cut convertibility to gold. Right. So you could exchange dollars for gold, except nobody did that because the dollar was as good as gold. But then suddenly you're like, we don't trust America anymore. People started selling dollars, and they wanted gold. And then there was a little bit of a financial panic. But through it all, right, we had inflation because the dollar was going down. The Federal Reserve was tightening policy. We had, by the way, this is interesting. We had tax hikes as well because there was a lot of fiscal deficits, a lot of fiscal spending. They wanted to pull that back. Johnson and Congress finally got together. They raised, it was a 10% surtax on corporate taxes as well as households, by the way. And they cut back spending. So you had all this going. You had fiscal tightening, monetary tightening, and still the market is up. Contrast that to what's happening right now. Fed's going to probably cut pretty soon. We have fiscal deficits. Nobody's talking about cutting spending here.
No.
All tailwinds, right?
1968, Ohio State Buckeyes won the national championship in football as an Ohio State fan. So
All
maybe
right.
we can get some history. Maybe we get some history repeating. Ohio State's pretty good this year in football. We'll see. They should be good at least. Anyway, yeah. I mean, listen, it is so unique what we've seen, right? Where President Biden is the nominee. I mean, he got the people's vote. That's who they said the Democrats wanted to be in, and he had a bad debate, obviously on the 27th, and everyone turned on him, and they said, "Let's get him out of there," and then a lot of pressure and. It is what it is. You all see the same news that we do. I mean, Sonu, we see people like you just described in 68, but in terms of this, to have a president who literally a month ago right now was very, very popular in his own party to not proceed. I hate to say it's a sample size of one. Maybe we've got one way far back in history, but it's awfully darn rare. And it's just unique. But listen, let's just put a bow on it here. How'd the stock market do on Monday, right? Monday came out. S&P up over 1%, right? Yeah. Technology did well. Small caps even did well. I mean, like everything. I mean, maybe not the Dow. Yeah, maybe not the Dow, but Dow is still green. I mean, we had a lot of leadership from Dow last week, financials, things like that. So listen, we had an up day in a pretty big way. So listen, that's just the market's way of, as we've said before, always pricing in. Is this really a shock that President Biden stepped down? I think you're living under a rock if this was a surprise that he did this. It was a lot of pressure. So Mr. Market likely had that priced in. Anything else? We just wanted to talk high level about that. Anything? And we're going to talk a ton more about this going forward. Anything else you wanted to talk about kind of out of Washington before we talk about, kind of the bull market?
No, I think all eyes are literally on the Federal Reserve at this point.
Yeah.
Inflation and Federal Reserve. I think both go together. I think, markets are pricing in about 2 rate cuts for sure this year, including in September. It's close to like 97% probability of an interest rate cut in September.
That's higher probability that I make it to Minnesota tonight. That's it. I think I'm the 3%. I think I'm the 3% of making it to Minnesota tonight.
Don't say that, because if we don't get a cut from the Federal Reserve,
I will.
But no, I think that's what especially this broadening out that we see. I think small caps, all of that. We've talked about it. I think that's what's powering those things as opposed to the politics. Politics will be what it is, right?
Right. So maybe let's do that. Let's talk about inflation, because the PCE comes out this week. Then maybe let's talk about the stock market. Then maybe some strong data from last week, and maybe wrap this thing up. What are you expecting with the PCE, the Fed's favorite measure of inflation? I forget what day it comes out. It's sometime this week, though. Correct, Sonu?
Yeah, it's on PCE will come out on Friday. When I'm on vacation. Q2 GDP will come out on Thursday. I'm going to be at an airport at the time, so I'm maybe on my computer.
We're junkies when it comes. We're junkies when it comes to stuff. It's like you're taking a good, well-deserved break, and I know you'll still be looking. So it's like geeky Sonu. He's going to look at 178 components of PC. I only know, or core PC. I only know that because he tells me every month. He's going to look at them on his sabbatical. He's going to look at all 178 because that's what Sonu does. Anyway, so, what do you think he'll say on Friday, though?
Core PC, I think, will clock in around somewhere between 0.15%, 0.2%. What does that mean month over month? Translates to about 2.4% your annualized pace. That's a little harder. Remember, core CPI came in really soft. It came in slightly under 0.1%. PC is not going to be as soft because there are other components. I mean, these things are different, right? One interesting thing is that's keeping PC slightly higher for now is financial services, by the way, right? Yeah. Including a higher stock market, which means advisory services are costing more because the stock market's up. And there's this interesting thing called spreads that, like, when you put money into a bank, they should be paying you 5.5%, 5.2%, but they don't, as all of us know. If you go to, I'm going to name a name, Chase, for example, they give you much less than 1%. That spread contributes to inflation. Within PCE, CPI does not take that into account, but PCE does. And there are a lot of other firms or banks that do this. And the greater that spread is, higher financial services or depository services inflation. Those are those weird things within PCE that's keeping it elevated. So,
interesting.
Take it for what it's worth.
Yeah, we saw last week, right? Some very large, well-known broker dealers had some issues in the news and some potential lawsuits on, was it fiduciary or not, that their people have cash in there and they're not getting it. Listen, that's not for me to decide, but the market was saying
I can't stop smiling here.
Sorry. Yeah. The market punished some of these names, and then you look at what happened last week. Market sold off a little bit, but okay, in general, financials, specifically regional banks from the small cap side, were breaking out on a relative strength basis. And saying on an absolute basis versus some of the broker dealers, which are breaking down, you could say. But all in all, that's interesting. So let's I don't know.
What do you want?
Let's talk about the bull market, I guess.
Yeah, let's
talk
talk
about the bull
about small
market.
caps. Yeah, let's
small
talk.
caps.
Yeah.
I mean, there's tons of stuff.
I know you have a ton of stuff.
I've got like, God, how much time do we have? I have to go to the airport.
You have to catch a plane.
Oh no.
You have a 3% probability.
Yeah, I have to go to an airport and sit there just to hear. So last night I was in Charlotte, right? I mean, I used to go to the Charlotte airport all the time when I lived there, and it's kind of like it's different now. They've really changed some stuff. I've never seen it like this. Sonu, it was 11:30 midnight. It was packed. I mean, absolutely wall to wall people. And what they did to us, I was going back to Cincinnati. It said like Cincinnati boards in 12 minutes, and then it goes to 0. Then your phone would buzz and it'd say boards in 15 minutes. They did this for hours. I mean, hours they did this. And twice we changed gates. They go to gate B7, go to gate B12, go to gate B9. They kept changing us. I'm like, you've got to be kidding me. I mean, it was then of course a storm came through last night, like midnight in Charlotte, maybe 11, whatever, it doesn't matter. Messing everything up. And eventually I made it home. It was a late night. But anyway.
I feel like traveling in the summer is harder than the winter for whatever reason.
I'm with you, because lightning. I mean, storms will mess it up, and there's some storms right now. So anyway, let's see. I've got a bunch of stuff here. What do I want to talk about first? Right. The Russell 2000 was up 11.5% in 5 days, one of the best 5-day rallies ever. I found 10 times it was up at least 10% in only 5 days. 1 year later, up 8 of those 10, up almost 25.4% on average a year later. So that's a good one there. Also, looking at the S&P, Sonu. Make sure I read this right. Yeah, over 50% of the components in the S&P 500 last week made a 20-day high. Now, what's that mean? That's like a monthly high, right? So we had a lot of breadth, a lot of participation. It wasn't just 7 stocks. It wasn't just 5 stocks. We had a lot of stocks go higher. Using some data from our friends over at Ned Davis Research, I found 1 year later, after you saw surges like that, higher 23 out of 26 times. That's 88%. And up almost about 15% a year later, up median to 16% a year later. Let's see here. The Russell 2 versus the Russell 1, 10-day percent change. The Russell 2, small caps, outperformed Russell 1, large caps, by more than 8% over a 10-day period. It's relatively small sample size. Let's be very clear. It's doesn't happen very often. Since 1979, it only happened 4 times. 3 of those times it was higher a year later, an average of 20%. Worth noting, this is exciting though, well, something for everybody. January 2000 was one of the times we saw that. Not a good time for the market. Maybe small caps did okay, but not the market. But then October, if I can remember writing, October of 98, November 16, April of 20. So again, small cap leadership is not a bad thing. Normally it means small cap, like explosion, like we just saw, of buying thrust, of buying pressure, tends to be strong and resolved to the upside.
But even 2000, after that, small caps outperformed.
Right, small caps outperform for years. Right. For years, small caps outperform. Maybe just a couple more. Let's see here. What else do I have here? 66%. Oh, this is friends over at RINMAC. They said 66% of everything in the Russell 3. So it's like pretty much the stock market. Russell 3, 66% made a 20-day high. That is like the one of the, I think this fourth highest ever since 1980. Strong results later. But here's one more. So RSI is like an overbought, oversold indicator. Keep this fairly simple. The 14-day RSI is the standard oscillator people use for overbought, oversold. If it's under 30, it's oversold. If it's over 70, it's overbought. You might think, overbought, that doesn't sound good, does it? Well, Sonu, are you sitting down? When 28 we had 28% of the components, or more than 20% of the components in the S&P 500 were overbought. 1 year later, higher. 25 out of 29 times, 86%, up 11.6% average, 12.4 median. So I just gave a lot of numbers on small caps, so it's probably bullish for them. But small cap outperformance and some of the buying thrust we've just seen, it's probably bullish for the overall stock market. So 6 months to 3 months, who knows? 3 months. I would be shocked if we're lower, to be honest, from where we are right now. 6 months from now, bet we're higher. A year from now, pretty good chance we are higher. I talked a lot. What do you think? Hopefully I said it all right. I'm a little tired. What do you think?
No, I think 3 words: momentum and breadth. Right? That's good, right? And even momentum in small caps. Let's say the 493 names, and then the remaining 1,500 or 2,000 of them.
Exactly.
That's 2,493 names going up is a good thing for the market. would you have known? I mean, that's a good thing, right? I mean, especially given what's happened recently. But again, it goes back to the fact that you want to have a bit of everything in your portfolio, and we talked about that in our mid-year outlook, where small caps have been frustrating for a while.
Yes,
But
very.
I think the economic backdrop supports it, and now we have rate cuts too, right? We have our friend Tom Lee. I saw him on TV today. He's on TV almost every day, but
Yeah,
it's more a
he
matter
is.
of when I see TV as opposed to
Yes.
when I see Tom on
Right,
TV.
right.
Short of you on TV.
I know. Feels like I'm there a lot too, but he's really on there a lot.
Yeah, you're talking about small caps and the rate cut trade, right? So I think that's a tailwind.
Yeah, no, we've kind of been in the same boat as Tom there. He's been saying, Russell 2 could gain 50% this year. We're not saying it's going to gain that much, but I would not complain if it were to happen. I did mention this last week, but I'll just remind the listeners. November, December of last year, the S&P gained wrong one. The Russell 2 small caps gained like 24%. That was the second or third best 2-month rally ever. I looked at the 10 best 2-month rallies ever. Sonu, again, this one was a year later. Up 27% on average those 10 times, higher 8 of them. So the question that I have, and I posed this last week, we can get into it again. The small caps are like flat this first half of the year, give or take, right? Frustrating, choppy. What if after a historic 2-month rally, they just went sideways to catch their breath, and now we've got the Fed cutting coming, we've got inflation coming back, we've got an economy strong, we're going to talk about next, and now small caps are take off again. It was a frustrating 6.5 months, let's be clear, especially when you're overweight them like we were, and we're talking about what we like them, and people are just pounding us because they're doing so poorly, and we get it, but boy, oh boy, sure feels a lot better now, and I think there's still gas in the tank, as I like to say. What do you think?
No, especially because given like what happened over the last 2 quarters, right? I mean, and the 2 previous quarters, inflation is coming down. Then, and I'm going to say this: it was a head fake what we got from the inflation data in Q1. It was a head fake, even though a lot of people are like, oh no, this is persistence. Inflation is not coming down. Maybe we'll have stagflation.
Rate hikes. Remember that?
Rate hikes.
Back in March, we were talking about rate hikes. We weren't, but it was out there. It was out there.
So none of that stuff is good for small caps, right? Like, but then, of course, as Powell acknowledged recently, I think we are back on this disinflation train, and this is a tailwind for small caps. I think this continues. I don't think it's. We're going to get a little bit of disinflation, this month or next month. We don't know. Maybe next month, inflation goes back up a little bit. Maybe it's 0.22% or 0.25%. But the overall trend, next year, this time, I think we are very close to 2% core PC.
Like you mentioned a word there that sounded really interesting, like me, train. I'd love to just take a train right now. I would love to just take a train right now. The idea of getting on an airport or airplane, going to an airport. Oh my goodness. Anyway, sorry. All right. So, let me see. Do I have anything else I wanted to point out? Not really. One more thing from the stock market point of view. We have not had a 2% daily drop. So close 2% drop on a daily basis on the S&P. I guess today's one more, but as of Friday, it was 353 days. Sonu, what in the world does that mean as trading days? The previous longest was 351. That was the one that was 2017, 2018, ended with Volmageddon in February of 2018 when the trade war started. And then obviously 2018 was not a very good time for equity investors. I mean, market didn't do all that well. Had darn near a bear market. It felt like a bear market if you were involved in it. We didn't technically have a 20%er, but boy, it sure felt like it. But the bottom line again is, what does that mean? What does it tell us? Well, listen, it tells us we've gone a long time without volatility. We do this podcast a lot. If you listen to this podcast, hopefully you're a little bit more aware of how markets are working. We haven't had a lot of volatility. The VIX is around 12, 13, 14 consistently. Well, 12, 13 really consistently. But Sonu, many times, I just wrote the notes myself, like 3 or 4 times in the 70s and 80s, we had almost 700 trading days in a row without a 2% move. So, or drop is what I should say. So yes, this feels like a long time. The media has been running with it. I mean, I've talked about it on Twitter. It's a long time without 2% drop, and it's 100% true, right? I mean, it's true. I can't say 100% because that's a guarantee, but yeah, I mean, it's been a long time without a 2% drop. But if you look back in history, you look at your history books, pull it back a little bit. We've had periods that literally can go double what we've just done or do it all again. So anyway, just some context around that.
And it's incredible that was in the 70s as well. That I wouldn't have predicted.
Yes.
I mean, I've seen your chart.
A couple of them. Yeah. You're right. You hear 70s, and obviously I I mean,
a lot of volatility and
yeah, well, so they tell us. I wasn't there, so they tell us. I mean, I don't know, but no, believe me, we get it. I mean, it was rough, obviously. Well, I think the first half was rougher because when you had gold pegged to the dollar, Bretton Woods that was taken off, and you had the oil embargo and terrible recession that took place in 73, 74, and it's a vicious bear market. But once 74 lows, things did all right. I mean, I know it's easy to say now. There's still massive inflation. Don't get me wrong, but for investors, did okay. All right. Anyway, so Sonu, maybe let's finish up with this. The economy apparently is not going into a recession. The manufacturing is not as bad as they tell us when you look at just some random, purchasing managers' opinions. And by the way, the consumer, which I think I saw I forget what it was. We had very poor consumer confidence once again for Michigan consumer confidence. I forget lowest since whenever, but it was lowest in a while. Let's leave it at that. Yet retail sales, the control group continued to say consumer is alive and well. Talk to me about some of those things on the industrial production front and the consumer front.
As somebody was joking, I forget who this was on Twitter. It's like you go to an airport, everyone's traveling, taking trips to Europe and things like that, and you ask them, "Oh, how do you feel?" "I feel terrible." The economy's terrible.
I think that sounds like Ben Carlson. It sounds like something Ben would do. Maybe not. It sounds like something Ben would say.
I don't want to get the wrong name, but
I'm pretty sure
probably
that was
Ben.
I think it was Ben. Yeah.
It was just hilarious, but I cracked up. But look, retail sales, right? I mean, consumption. When you talk retail sales, we talk about good spending. Everyone's still spending. Guess what? Right? It shouldn't be a surprise. I mean, I feel like I still get Amazon packages. My son got a lightsaber today. Don't ask. Yeah, so he was very excited.
What color? What color?
Red. He's very into the dark side now. I don't know if that's a bad. I live with a psychologist.
Oh boy, she's really.
I'm like, no, she's already like, why did you have to show him Star Wars? Right? I'm like, he's 7.5. I'm like, he's gonna see it, and he gets it. If he needs to know it, he may as well get into it wholeheartedly, right? As opposed to anyway. One of those.
When is your birthday? One more time. When's your birthday?
May 4th. May 4th.
May the 4th be with you. I mean, you gotta give the boy Star Wars. It's in the blood in the Varghese family there.
Yeah, there you go. Yeah. So he's really into the dark side right now. I just took him to a comic book store the other day, and guess what he picked? He picked some Star Wars comics.
So there you go.
Yeah.
Okay.
So anyway, retail sales. All this to say, I bought comic books recently. I bought a lightsaber recently, amongst a million other things. And so is the rest of America. Headline retail sales actually flat in June. Expectations were for a 0.3% decline. But look, the drag was from two places. Gas station sales. Gas station sales fell like 3%. Why? Well, gas prices are lower. No surprise. Auto sales also fell. Well, this gets back to, this whole thing with computers. So apparently there was a hack at various dealerships in June, and that caused sales to slump. Right. And I think that's going to come back in July and August. It's going to be a boost for the third quarter consumption data. And then the other thing is when we talk about retail sales, we're talking about nominal sales. That includes price in there. You and I have talked ad nauseum about used car prices falling, new vehicle prices falling. Yeah. You saw the same thing in June. So, retail sales as on the auto side are lower, right? Because prices are down. But you take all that out, something called the control group, core retail sales, things like online sales. Online sales were up, get the 6.5% annualized pace in the second quarter. Wow. Over the last 3 months, second quarter, control group, the core retail sales number, up almost 4%, right? Now, 4%, you think, okay, that's nominal. Like I said, that's price in there. But prices for goods have actually been falling. So you think about in real terms, you're talking pretty strong consumption data here, right? It's almost like, wait, everyone's talking about, could we go into a recession, slowdown, things like that? And consumers like, no, you're not going.
I saw some headline about the Black Swan fund manager. Oh, gee, wonder what he's thinking. Literally today, talking about how stocks are going to cut in half. It's like, the Black Swan guy is saying we're going to have stocks cut in half. Come on, you're kidding me. You're kidding me. Anyway,
that's the consumption side. So everything, I think we'll get consumption data this week. I mean, with the GDP data for Q2. Okay. I think GDP is like wrapping GDP into this, right? Q2 GDP is probably clocking around 2.5%. But remember, that could go either way, up, down, because of those two volatile components in GDP, inventories and net exports, exports minus imports. Right. It's very hard to predict what these things are. It's very noisy. It can get revised a lot. But look at what we call final demand. I think we've talked about that before.
Yep.
How much are consumers spending, businesses investing, and government spending too.
So in essence, taking out the volatile stuff like inventories and trade, which don't always give you the best backdrop, because as we had Claudia Sam on probably about a year ago, and we talked about the idea of back-to-back negative GDP prints, which is what we saw in 22. How in the world do we have a recession? Because after a 100-year pandemic, you shut the economy down, you open it up. You had some, let's just say, wonky things stuff take place with inventories and trade, and then but you look at the real stuff, how businesses are doing and consumers are doing, there was no recession in 22. Now, believe me, there were slowdowns, there were concerns, or issues. We get it as a bear market. I mean, it wasn't fun, but again, the economy did skirt I think you could say, a recession when you look at those final demand.
No, I think safe to say. And this time, real final demand, take out inventories and net exports, I think it clocks in around 2.5%, which means we are growing on trend, maybe slightly above trend. And as we've been talking about, the economy is in a pretty normal place right now.
I mean, listen, we make up numbers, and I'm not making them up, but I try to remember them. I mean, last year, the first half of the year was, it's okay. Second half of the year, remember, we had I think almost a 5% third quarter and a really good fourth quarter. I mean, is there a tell me there's a chance. Is there a chance we're going to see something like that again, Sonu, where it's like, first half, but really good second half? Or is there enough spring for that? What do you think?
I think we could see a rebound higher, so Q2 GDP, I mean, right now, I think expectation about slightly closer to 2%. I think it comes out 2.5%, but conditioned on all this noisy stuff, right? I think real final demand, what really matters, comes in around 2.5%. I wouldn't be surprised to see that number go up. Now, two big things on that, especially Q4. In Q2, residential investment, housing is going to be a drag once again. Right, we had 9 straight quarters in 21, 22, early 23. Right. Housing was a drag on GDP growth. Then rates sort of subsided. We got 3 quarters. It was a positive force on GDP. We're going to see that reverse likely.
Okay.
But if interest rates go down, right, I think if markets are pricing in cuts, I think hopefully housing activity picks back up and it's no longer a drag on GDP. It may not contribute a whole lot, but at least it's not a drag. I think that could be what gets you from 2.5% final demand closer to 3%.
Okay.
I think.
Okay.
So I think the potential is there.
So we kind of covered the consumer. The consumer is alive and well. We'll just put a bow on that. Industrial production, manufacturing, right? We keep hearing how, I think which one is it? The PMI. The PMI is like negative. Well, not negative, less than 50. So in contraction, I think 19 of 20 months, if my math is right. It's something like that. Those are surveys of purchasing managers. Surveys.
300 of them.
Only 300 of them. Now, talk to me about hard data. We've talked a lot about, listen, we don't ignore soft data. I mean, we've got it. We use it in some of the models we do and some of the way we look at the world. But hard data, it tells a lot different story, doesn't it, Sonu?
Yeah, like ISM PMI last 3 months. April, May, and June, I believe, is below 50.
Yeah, you're right. Correct. Those are the last 3 months. Thank you, Sonu. Yes, thank you.
It's that time
I'm exhausted. I'm exhausted. I'm so tired. I got 3 hours of sleep last night.
Awake,
yeah. Sorry, everybody.
Yes.
Yeah.
So, below 50, saying manufacturing is in contraction. But you look at the hard data, which the Federal Reserve collects from tens of thousands of companies, production data, actual production data. So this is real, like it's inflation adjusted. Up 4% annualized over the last 3 months. Over the last 12 months, it's not great. Production's up 1%, but we've seen some momentum recently. Production's running 2% above December 2019 levels. Now, is it fantastic? No, I think Q2 is really good. But overall, like bigger picture, last 12 months, is it great? No, but it's not a, recessionary. It's not a slowdown. It's not contraction. And remember, in 2019, manufacturing is actually contracting at the time. That was because of the trade war and things like that. And that's something, at that time we thought 2019 is a great economy, right? But that was despite what happened with manufacturing. The 3 good stories within manufacturing, I won't, get into all the details.
Go read your blog. Go read Sonu's blog.
CarsonGroup.com/research. Vehicle production, it's running above the pre-pandemic pace.
It soared last month.
Right, exactly.
Big jump.
Americans, guess what? Still love SUVs and minivans. That stuff is can't produce enough of them, right?
Go figure.
But again, looking forward with this stuff, you always want to look forward. Yeah, the data, the past is what it's past, right? But looking ahead, remember, production of vehicles came to zero. It went to zero in April of 2020.
True.
There was nothing produced, so we still have a deficit of vehicles in this country, which is part of the reason why prices went up. We have to make up the deficit. So I think for the next several months, maybe even for the next year, I think auto production, unless we go into recession, which is not our base case, unless we go into a recession, I think auto production runs above what we saw before the pandemic, right?
Okay.
And high-tech equipment production.
And that probably, I'll just jump in. That probably surprises most people. I mean, all you listen to is how bad manufacturing's doing and how bad everything is, and all the black swan guys saying the stock market's going to get cut in half, and you got Harry Dent saying the end is near. You're telling us hard data says we're actually producing. What's the lingo on the assembly line? More autos. How's the
vehicle
they use?
Vehicle assemblies.
Vehicle assembly. I just say cars being made, but yeah, vehicle assemblies is running. It's had a big jump. That's not what you see in an economy that's about to fall off a ledge, you know?
No, light truck assemblies, as I was saying, SUVs and minivans, running 31% above the 2018-2019 pace.
And they're not light. I tried to pick one up before. No, geez, I'll shut up. Yeah, we're still heavy. Yeah.
We still have to keep,
I know.
Captain America. No, so that's one story on the manufacturing side. Then we've talked about AI and all of that. Where does that show up in the macro data? High-tech equipment production. We're talking about computers, communication equipment, semiconductor chips. Continues right. Month after month, it just goes up, high-tech equipment production. Last 3 months, 13% annualized pace. Last 12 months, positive 8%. Production in this category, high-tech equipment manufacturing, 31% above December 2019 levels. By the way, like I said, this is real data. It's not nominal anything. So it's like inflation adjusted, right? I think part of the demand is all this AI related stuff, CHIPS Act, IRA, all of that. So I think that's another story. Part of that is also another offshoot. This is, courtesy shout out to our friends at Employ America. Scott Damer pointed us to this data. Electrical equipment production. Production's up 20% annualized over the last quarter.
Now, when you say electrical equipment, I mean, what is that? Like, I mean, I kind of think I know, but what do we say that? What's an example of that?
This is probably where things like data warehouse equipment, stuff like that goes.
Got it. So again, it's high tech stuff. It's a cousin of high tech stuff.
It's a cousin. It's a cousin. It's just like some of these categories. There's a category name. What is actually in it? You have to go digging under the data, but it's stuff like that, right? There may be things related to the grid as well that's happening, right? So we saw a decade-long stagnation in electrical equipment production, 2010 to 2019. Now we are running about 18% above 2019 levels. So that's a big positive. Wow. Again, a good story there for the industrial side. Then coming back to politics, defense production. I think, especially when you have a Democratic president, I think that usually, and this is partly, we've seen this in history, in the 90s with President Clinton, 2010s with President Obama, we saw defense production fall. I think that was partly with split Congress. I mean, there was cuts in spending and all of that. But now we don't have that. Even with a split Congress, Democratic president, defense equipment production was up 10% annualized over the last 3 months. Yeah. It's running 4% above December 2019 levels. I mean, the real surge has happened over the last year. But again, this is an area where I think government spending is boosting the economy. It's a tailwind. It was a headwind in the early 2010s. So it's another big difference between what's happening now and, the last decade.
I mean, just, back in October, right, when the terrible war started in the Middle East. I mean, we were talking about this then. I mean, and it's not slowing down. You just look around, what's going on around us. I mean, there's reasons to think whoever wins the election in November, whoever's even in the election, whoever, we'll see what happens with all this stuff. But whoever's in there, when it's all said and done, I mean, continued high spending, continued deficits, continued defense spending, probably continued spending on high-tech communications and high-tech technology, equipment, onshoring, bringing things back, not relying on China, different parts of the world, both being hard on China. I mean, these are things that I think the left and right do agree on. Maybe not a lot, but those are things that they do agree on, and those things we're not ignoring. But I mean, Sonu, excellent job as always, looking at the data that everybody's seeing, yet they see what they want to see. It is what it is. People see what they want to see, but you continue to kind of say, listen, things aren't so bad. The economy's probably going to surprise to the upside from what the consensus thinks, and that is why we're in a bull market. I did see forward S&P 500 earnings, according to FactSet, up to 263. I believe I saw that. I mean, they were 224 at the start of 23. I just remember like a week or two ago, I was talking about 260. It's up to 263. So again, we're in the middle of earnings season. Not even the middle. We're probably
the start of it.
Yeah, we're like getting close to maybe second base because a lot of big names are going to start reporting over the past week. And again, it's early, but like 80% of companies have beat on estimates again, or earnings and positive things, they're seeing. Now, again, the big names are coming, but I think I saw almost 9% earnings expected year over year. And normally that comes in better than expected. So we might hit double digit year over year earnings growth for the first time since 2021 when this earnings season is all said and done. What else this week's going to move markets or, heck, you're out of here. You're leaving. You probably don't care. But what we talk inflation. I mean, inflation data Friday. Anything else this week we should watch?
I think all the eyes will be on GDP. I mean, GDP is in the past, but that's why you look at, take out the volatile stuff, inventories, exports, that tells you what final demand, that gives you an idea for momentum into the next quarter as well. So
all right.
I think there are a lot of people expecting, a pickup in consumption and demand over the second half of the year.
Okay, that makes sense. I just looked. It's 10:24 Eastern time.
Is it time to go wait for the plane?
my flight leaves at 12:27 Eastern time, so 2 hours and 3 minutes. But I'm probably going to get an Uber or something. I'm probably taking an Uber home in an hour when they tell me the flight's canceled. But yeah, we'll see. But anyway, so Sonu, if you want to talk about where are you going? What are you up to over the next coming days and weeks or so? Yeah,
I'm going to Europe. So if our politicians could help me out a little bit here and don't talk down the dollar, please.
Not yet.
I would like a strong dollar for the next 2 weeks.
It's the least we can do for Sonu accurately calling no recession. Give him a strong dollar here.
Give me a strong dollar just for 2 weeks. That's all I ask for. As long as the dollar can stay up against the Swiss franc. We're going to Switzerland for a little bit.
There you go.
And then England as well. So hopefully, maybe you could do something in front of Big Ben or something.
Well, I was gonna say, we do Take 5 video, and hopefully that's on our Carson's YouTube channel. You can find it pretty fast. The rumor is we might have Big Ben in the background for something like that.
We'll see if the University of Michigan consumer confidence data people call me and ask me, how are you feeling about the economy? And then I can tell them this is terrible.
Yeah, I mean, I'm only going to Europe, and it's just miserable. It's miserable out there, I tell you. Miserable. Yeah, but all right. Well, listen, everyone, thank you. This was a little bit. Well, you know what? We still went 40 minutes. We still go for it. It doesn't matter. We didn't even have a script. We literally didn't have a script. We just kind of hit record, and we said, something will come out of this, and hopefully everyone enjoyed it. But again, this was episode 94 of the latest Carson's Facts versus Feelings, and we called it again, Is This Really Happening? Some crazy stuff going on out there. But I mean, the plan, so this is
next
exciting.
week
We can probably promote it. Let's promote next week. Let's just say it. Let's get people excited about it. Who's on next week, Sonu?
Cliff Asness is on next week. We did a podcast with them at Carson's Confab last year
last year. Nashville. We were in Nashville. That little room that no one could find.
Yes. But we talked to Cliff there. Cliff is amazing, as you can expect. You ask Cliff one question and he could.
Oh my goodness.
He covers so many things over there.
We did, and we did already record it, so we kind of know it. I mean, we might ask him, I don't know, what have you learned running a company? And he gives you this 12-minute answer that goes all over the place, and you're like, that was like the greatest answer I've ever heard. It was amazing, but it wasn't all what I asked him. Like it wasn't anything. It's not at all. But again, it's so Cliff is so smart and so fun and just so unique and such a
he's funny.
I don't know, firecracker in a way. Just kind of says what he believes, and he's been that way his whole life. And we talk about Marvel movies. I mean, about Marvel movie. I mean, Cliff believe me, we could do an entire podcast on Marvel.
We had to get him to stop. We had to actively.
Okay, Cliff.
We need to end this.
Exactly. He's got some strong, like everything with Cliff, he's got some strong opinions on his Marvel movies. But anyway, that'll be next week's podcast. And then I don't know, you going to try to do one from over there? Is that the plan, or we'll see? Okay, all right.
See, hopefully.
See if the internet works. If not, we'll still do these podcasts. We'll see. I'll be here, assuming I don't get stuck some random, airport or something. But yeah, we'll be back. We'll be back next week. Everybody, thank you for joining us once again. We're both a little tired, especially me. So hopefully this all made sense. Hopefully you enjoyed it. If you didn't, tune in next week with Cliff. I promise you it'll be better than whatever we just threw on the wall tonight. We wanted to get something for you this week. So all right, Sonu, I'll text you from the airport and let you know what's going on. I gotta get going to the airport. See everybody next week. Take care. Thank you. Goodbye.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.